Oil, geopolitics, and market nerves. I want to take a look today, the 9th of March, a little bit after lunchtime, as to what's happening in the market, why, and what the outlook is potentially for the future. Now, as you probably know, the US and Israel conducted a joint strike on Iran, and it's significant and it is escalating. Now, the uncertainty here is that we don't actually know what the duration of this is going to be, because we don't know what the intention from the US government is going to be. We don't know whether it is a regime change as the goal, or whether it's just removing some of the military capability of Iran. Now, those two things are very different, because just purely removing the military side of things means that it could be days. Changing of regime could be months or potentially years. Now, the reason that I've got this picture up here, the Strait of Hormuz, is because this is where around about 20% of the oil and gas volume of the world goes through. Now, at the moment, this is closed. Now, partly it's closed because there is a lack of safety, partly because some of the oil exporters are saying, look, we don't really know what the security looks like. We're not going to take a risk, and we are going to pull back on some of the exports. Now, when we close off the ability to push out about 20% of the world's volume, we are going to see a spike in oil prices. And I'll show you why that's important. Okay, so rough rule of thumb around the increase in oil prices. Around about a 10% increase in oil prices, we know increases the cost of pretty well everything. From an inflation point of view, which is the end knock-on effect, prices increase by around about 0.3% for every 10% increase in oil prices. Now, that is anecdotally for US and Europe. Just think that what we see in the US, predominantly, we're gonna feel the same thing here. If we see inflation go up, that's going to skew the likelihood of interest rate moves here at home. Okay, so in the context of 10% increase in prices, you can see there's been a massive spike. Now, when we were looking a week ago, we weren't sure what the duration was going to be, the impact and the severity, and the market was sort of pricing around about sort of $75 to $78 per barrel, and that spiked significantly. The likelihood then of a protracted event seemed to be a little bit lower. Now it looks perhaps like it might last a little bit longer. Around about a 25% increase. So if we look at what are the impacts in terms of inflation, potentially inflation up by around about 1%. Now, that is going to have an impact on interest rates at home, and I'll show you this here. This is in the Aussie market. What are the expectations of a rate rise? And you can see even in the last sort of 2 weeks or so, there was a very low chance of an increased interest rate in the next little while. But you can see that that has jumped up. Now, that's only to the 6th of March, so Friday. We don't know what it looks like today, and we will probably know tomorrow what today's rates. But you can see as soon as that conflict kicked off, we can see the impact or the expectations of one more rate rise. Now, looking a little bit further out, this is what the institution, so the big money, is anticipating. And it's not a guarantee. This is a snapshot as at today. What do we think things will look like? Now, the first thing that I think you can do is to cut this graph, probably 2/3 of it down there. You can ignore it. That is too far out to be predicting interest rates today. But if we have a look at the shorter term, probably in the next 2 or 3 months, I wouldn't be surprised if we saw an interest rate rise potentially come forward. Maybe it's the next meeting, and perhaps by the 30th of June, I wouldn't be surprised to see 2 rate rises. Now, if we have a look at somebody like Matt Comyn, phenomenally smart guy in charge of the CBA, of course, he is calling 1 rate rise this year. I've got a whole series of economists who are calling 3 rate rises. I guess it looks like I'm fence sitting and saying perhaps there are 2, but that's the context. That's why I think there might be 2 rate rises. Now, you've heard me talk about the fear index or the VIX. Now, a quick summary or reminder, this is institutions in the US buying insurance against investment markets falling. If we think that there is a risk of markets falling, if we're more fearful, we buy more insurance, and this is what this shows. Now, in terms of the levels, just some very quick markers. 20 is saying, hey, there's some fear, there's some risk around. 30 is traditionally quite an elevated level, and it's a marker for saying, they call it extreme fear. I think that's probably a little bit sort of doom and gloom, but it is a real acknowledgement that there's some extra concern, and we're starting to see things priced up a little bit. Now, for context, historically, that's the GFC when we sort of hit sort of 80-ish. That's COVID, where we're in at around about 70. This was Liberation Day, so last April when Trump got on his tariff bandwagon, and that was sort of 50, a little bit under 50, and we're sitting here at the moment just under that 30 mark. It is an acknowledgement that in the last little while there has been a bump. Now, there has certainly been plenty of periods prior to that where we've seen this sort of fear. It does subside, and you know, even in something like the GFC, you can see that real uncertainty spike, and it does come back down. Now, let's have a look at what it looks like for investment markets. If you have a look at the one-day fall, today we're down 4% by lunchtime. That's a big number for a single day. When you have a look at it over a week, that is a pretty ugly picture. 9,500 down to, you know, I can't see the number there, but it's about 8,500 or thereabouts. Really, really not pretty. Now, you have heard me say it before, but if in doubt, zoom out. Irritating, granted, but it's really valid to have a look at it. So that's 1 week, looks pretty confronting. 1 year, it's less confronting because we're going from sort of 8,200 up to 8,800. Okay, we can see that falls there, but we've still actually had a relatively stable year. And then if we go further back to 10 years, it's way less confronting. And this is why we do the if in doubt, zoom out. Now, as a reminder, you have well-diversified portfolios. So there is going to be some shock absorber. It is not just the ASX or the S&P 500. We do have a really good spread of investments. We've got shares, we've got property, we've got cash, we've got bonds, and we've got alternatives. And you'll remember the alternatives, ports and airports, roads and bridges. The value of an airport, provided it's not the Middle East, is probably relatively stable today versus what it was a week ago or a year ago. All of that said, there is a lot going on at the moment. If anybody is scared, please let me know. Just to short circuit or preempt some of the questions, people will be asking about gold. Traditionally, that's a safe haven. Now, what's really interesting is whilst the gold price has run up recently, the actual Aussie dollar denominated value has come down because the US dollar has strengthened. So that's one. Silver's been very, very volatile. Again, these are not assets that I would say, you know, let's rush in and buy these things. Knee-jerk reaction, I don't think fundamentally they're a great idea. We have seen things like crypto keep taking a dip. That's another question that we traditionally get around here. And then questions like, should I be buying, Jai, or should I be selling? I can't answer that in broad terms. If we are still growing wealth, there's always merit in considering buying at a discount. Whether or not you put an enormous lump in today, I would suggest probably not. Averaging into the market has traditionally been a really good way of mitigating or minimizing risk. Do I think that this is a time to be that concerned that we would pull everything out of the market? For me, the very simple answer is no, and that slide in the background is going to be the reason why. Those are all general comments. If you're worried, if you're losing sleep, if you want to pick my brain, please let me know. Happy to have a chat through all of this and more. We'll chat soon.